Welcome back to our first-time homebuyer video series. In this installment, we are going to cover shopping for your mortgage, picking your mortgage team, and knowing your budget. When it's time to shop for your mortgage, a great place to start is with the lending pros at your credit union who can help you investigate all your mortgage options. It's wise to get a pre-approval so you'll be ready to go when you find the right house. Pre-approval will help you understand how much you can expect to borrow, which will narrow your home search to properties within your price range. It can also give sellers a little more confidence in how serious you are when making an offer. Think about your long-term plan when you're exploring your mortgage options. There are fixed-rate mortgages and adjustable-rate mortgages, also known as ARMs, and they are priced very differently. You can take out a mortgage for 30 years or as little as 5 years. You can borrow with as little as 3% down, or you may need up to 20% down payment to qualify for some loans and terms. All these factors will affect the fees and interest rate you pay as well as your qualifications for specific mortgage programs. We've all heard of Fannie Mae, but what is that really? It is a federally sponsored entity that helps make mortgage funds available to consumers. Fannie Mae programs have terms up to 30 years and down payment options as low as 3%. You might qualify for a first-time homebuyer program that offers these lower interest rates, low down payment options, and no private mortgage insurance, also known as PMI. Part of the mortgage origination fee that you may pay in other loan programs is often waived with the first-time homebuyer program. Another government program that's popular with many first-time home buyers is the Federal Housing Administration, or FHA, loan program. FHA loans usually require smaller down payments of 3.5% and can be more accessible to those who don't meet the credit requirements of other programs. FHA loans can be obtained with credit scores as low as 600. If you're a veteran, it's worth looking into VA loans. These loans offer veterans a zero down payment option with no PMI and a minimum credit score of only 620. We've mentioned the term PMI several times in this video, so what is that? If you put less than 20% of the purchase price as a down payment, your lender will likely charge you a monthly premium for what's called private mortgage insurance, or PMI. PMI protects the lender in the event you default on your loan and the value of your home declines significantly. Now it's time to pick your team. In addition to your mortgage consultant, you'll want a real estate agent who will move quickly when a new listing goes in the market, and who will advise you honestly on preparing your offer. It's also good to have a home inspector you can trust. Your home buying team should communicate well with each other and keep everyone, including you, in the loop. Remember, your team starts and ends with you. Your real estate agent is your insider to the world of home buying, and the right one can be an invaluable asset when buying your home. Talk to trusted friends and family members who might be able to offer names of people they've worked with. An agent who's worked in your preferred location extensively can share insights on things such as new developments, taxes, and other issues that may affect the market value of the homes you are considering. You may want to look into hiring a realtor, which just means that your agent is a member of the National Association of Realtors that has pledged to abide by a code of ethics set out by that group. Working without an agent can be a treacherous road. If a seller does a for sale by owner listing in an effort to save on the agent commission, that seller might request that you purchase without an agent as a way to keep agents out of the transaction. That's not a great idea because you'll be losing the expertise the realtor can provide. Carefully evaluate your options before agreeing to it. A knowledgeable home inspector is just as important as a great real estate agent. During your house hunt, you may find a house that looks great at first glance. Then, as you walk through a few of the rooms, you notice problems with the house. Getting a home inspection can save you thousands of dollars in the long run. You may want to check with associations, such as the American Society of Home Inspectors or the National Association of Home Inspectors, that require members abide by standards and a set of ethics. The inspector will be able to find problems you might overlook, and you want to know about these problems before you sign on the dotted line. If the home inspection reveals serious defects that the seller did not disclose, you'll generally be able to rescind your offer and get your deposit back. Now let's talk about your budget. Before you start looking at houses, first-time home buyers should be realistic about their budgets. Taking a couple of months to closely track spending can give you an accurate idea of the amount of money you'll be able to put toward a monthly mortgage payment. When you start shopping, it's easy to get blinded by beautiful backsplashes, granite countertops, hardwood floors, and fenced-in backyards that you hadn't even realized you wanted. Be careful. You may begin to rationalize a larger purchase than what you've carefully planned. Be sure to prioritize what's most important in your new home. Proximity to work, a big backyard, an open floor plan, a quiet street? Is it the number of bedrooms or bathrooms? What about other amenities like an attached garage or a pool? It all depends on your personal situation, but doing the research beforehand can help you nail down the properties you're most interested in viewing. It's good to remember that high-end countertops or appliances are easy to add later, but you can't easily add another bedroom, get a better location, or a more functional floor plan. Knowing what you need to have and what you can live without is what a budget's all about. Consider how you're likely to feel about a feature you dislike in a house 5 or 10 years down the road. You want to love your home, not regret purchasing it. Sometimes home buyers fall in love with a house or neighborhood. Purchase a home you can afford, not one that stretches you to the limit. The right house allows you to save for retirement, college education, or perhaps your next home purchase. It ensures you have cash available in case of emergencies or a job loss. Try to keep your total housing payment under 30% of your gross monthly income. You never want to be afraid of your mortgage. Remember, just because someone will lend you more money doesn't mean you should borrow it. An online mortgage calculator will step you through the process of finding how much you can borrow. If you think you might be pushing the limits, use this type of worksheet to get a quick reality check to know exactly how much comes in and how much goes out. Tools like this are a useful guide, but adjust the answers based on your individual situation. How much is your current rent payment? Did you meet that payment each month with ease, or was it a bit of a struggle? The payment you can afford right now is a good indicator of what you'll be able to afford in your new home. It's easy to show up at open houses and fall in love. But why waste time looking at homes that are out of your price range? The last thing you want to do is find your dream home and then realize it's way over your budget. Check out our third and final video in our home buying series. We will finish up the conversation with how to go about shopping for your new home, what it takes to get approved for a mortgage, and when and where to apply for your mortgage. See you soon.